Hi there.
Hi.
So today I'm joined by Mariam.
Hello.
Catherine is taking her sun bath in Barcelona somewhere. Yeah, so what's on in the next episode of Elish Crypto Weekly Analysis?
Today I'll be talking about Binance and Tesla, and then we'll move to economic calendar of next week.
I have a piece of crypto news and blockchain, then a forecast of Bitcoin, and news on my favorite USD and GBP. So, a piece of blockchain news. According to Chicago Mercantile Exchange statistics, Bitcoin futures demand is growing despite a fall in Bitcoin price. So the third quarter showed an increase to 6,629 contracts. We might have covered this issue in the previous episode, but these are just more numbers. It's noted that only about half of these purchases were made by American investors, with 26 of them, or about, coming from Asia-Pacific region and 21 coming from Europe and the Middle East. So the exchange is feeling the demand, and it's planning to introduce even more trading instruments with crypto in 2020.
I will be talking about Binance now. So, crypto exchange Binance is set to add fiat crypto trading support to its primary platform, starting with peers against the Russian ruble. This move comes with Binance proved to dominate the crypto fiat trading markets on all major markets. The exchange already opened 4 dedicated crypto fiat exchanges in the United States, Jersey, Singapore, and Uganda, and also offer fiat crypto trading in a few other markets with some alternative arrangements. Wow.
Yeah. Okay. So news are coming. Well, cryptocurrency is living its life. What's about Bitcoin? With Brexit deal talks ongoing and US-China trade war is in some sort of a calm down, emerging markets are recovering during October, but in turn, just like we noticed in the previous episodes, the demand for alternative stores of value like cryptocurrency is reducing. So BTC had a sharp and simple week after the previous fall in the late September from 11 to 8,000 level. Just like we predicted, it crossed the 7,800 bottom support line and crushed 800 USD down, now lingering around 7,400 and awaiting of what? Well, basically we may expect that with all these major economic events going smooth and positive, with all these military conflicts not developing, with the emerging markets economies growing, we may expect in long term and rather in the midterm a stable and a positive development of traditional instruments, which will in turn lead to diminishing interest in bitcoins. So, just like before, we'd like to stress your attention to the USD that bounced to 97 in a USD index futures and has regained its moderate but steady move within the upwards channel, bouncing from the lower support line. So we're not talking about USD as a currency, but rather about the US dollar index, which measures the dollar's strength against not a single currency, but against baskets of major currencies. The index was up, like we said, to 97.407. Why is that? First, the market purchasing managers index came in higher than expected, 51.5 compared to 51.1 expected. Also, data on unemployment show that jobs market remains healthy. However, the data confirms expectations that Federal Reserve will finally cut the interest rate, just like Mr. Trump always wanted, and so that will rather push the USD down, so shorten your position, at least in the midterm. The Federal Reserve meeting will happen in the end of the month.
Tesla shares on Wednesday morning rose sensational after posting a surprise and held a net income of 143 million US dollar for Q3.
Wow.
That's huge. Analysts and most expected a loss, but Elon Musk company, even though sales dipped 1% from last year to 6.3 billion US dollars, increased deliveries and cut expenses at the share price, powered from average 255 USD per shares. Highest price since July through 300 USD per share, gaining around 20% in literally few minutes. Here I must stand that this is whopping rise from 180 to 300, around 70% in rounded 5 months. Now we speak of profit, do we?
Yes, we do.
Of course, the analysts say it should give a further boost to regional markets next week. Consider this. Richard?
Yeah. Those who don't like playing with shares were, I suppose, enjoying the GBP situation. So the Great Britain pound demonstrated us throughout the whole week the meaning of volatility and rally. So after another helmet skyrocket growth from 1.22 USD per GDP to above 1.3 from the bottom to the top just in a few days, which was a reaction to EU chair and British PM announcement of agreement reaching, British pound fell again on Monday and Tuesday against the USD. In Asia and elsewhere, immediately after the news came from the additional parliamentary sitting that vote for the Brexit deal was not approved, and lawmakers voted to withhold Prime Minister's option for the deal. So then they had just another sitting. The moment GBP stabilized on Wednesday, a series of contradictory events came just one by one. On Tuesday, lawmakers wanted in favor of Prime Minister Brexit plan, finally good for you, Boris, but then opposed extremely tight timetable to complete the legislative process in 3 days because they have to quit on the 31st of October, just like we say. And so that draw a sharp peak in the chart of GBP, which first dramatically rose and then dramatically fell even lower than it was. The European Union will not insist on Brexit on the 31st of October.
Next we'll talk about economic calendar next week. Tuesday, October 29, 2019. CB Consumer Confidence US and pending home sales US. Wednesday, October 30, German unemployment change, Germany, Europe. Non-farm employment change, US. GDP in US, manufacturing PMI, China. Friday, November 1st, 2019, manufacturing PMI, Great Britain. Non-farm payrolls, US, and unemployment rates, US, and ISM manufacturing PMI, US. That will be next week, I think.
Yeah, plenty to look after of. So, guys, but until then, enjoy your weekend, have a rest before the next hard 5 days trading, and may the profit be with you.
Of course.
Bye.
Bye-bye.